Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 8th of July. Now last week was quite an interesting week. It was quiet trading action for most of the week, but then concluded on Friday with a spectacular display of volatility, which created some nice moves in many markets, many currency markets, also the US indices and also the US dollar. So before we take a look at the markets and potential opportunities for this week, what I'd just like to sort of announce is if you would like to continue receiving these sort of market reports, then please, if you could come to the Smack the Markets website here at smackthemarkets.com, scroll down on the first homepage, down towards the bottom, you'll be able to register your email address to receive these reports twice a week. So let's go and take a look at the markets now and take a look at some of the opportunities that we're keeping an eye on in the trading room this week. So first of all, if we come and have a look at the Dow here, this is the Dow Futures contract, we can see that on Friday here, if we zoom out of this, we can see that Friday's price action sort of brought the index down. It brought it down to sort of quite a low level here, bouncing off that sort of 50-period moving average. But more interestingly, the market found support at a structure level that we had had in here for a while, which was this 26,800 level. Now, the market closed then on this sort of red doji candle. So the market bounced off this level, recovered most of its gains, most of its losses rather, and closed up there. Now, since then, in this week's price action so far, the market sort of come back to retest that level. We're finding a bit of support off there at the moment. Now, on the higher time frames here, if we come and have a look at this on the daily, the market is just sort of come back to technical levels in the context of the trend here on the daily time frame. So still from a technical perspective, these markets are still looking bullish. There's no reason really here to be looking at bearish sort of signals at this moment in time. Now, even if the markets here do sort of fail to sort of run out of steam in the not too distant future, I think certainly in the near term we could be looking for the bias here to the long side. So from our side of things, we're looking at opportunities long on these US indices, as long as these sort of technical levels hold, and particularly the one of interest at the moment on the US Dow Jones is the 26,800. This is the Dow Futures contract, by the way, so the cash market will be sort of slightly different, but the level will be fairly similar. Now, if we come and have a look at oil, so last week, at the beginning of last week, we were looking at oil short opportunities back here on the sort of 4-hour time frame. We were looking for the sort of $55 a barrel level to be tested. Well, of course, with everything sort of changing last week with the US employment numbers, this now has also changed the perspective of the near-term oil trend as well. So from a higher time frame perspective, if we take a look at this on the daily time frame, we can see that the market sort of certainly found support around that sort of 56 area, and is now pushing back up towards 58. Now, we've got a trading window here that we took advantage of last week, which was in between 58 up to that 60.50 level. And it looks like we're going to get another opportunity to take some advantage of that trading window too. So from the daily time frame, this market still looks strong. We've still got we've now put in a higher low here on the daily chart, and if the market can get through 58, then we'll certainly be looking at trading opportunities up towards that that sort of 60.50 level. If we come and have a look at this on the 4-hour time frame, you can see this a little bit more clearly. On the 4-hour, we've now got sort of convergence to the long side. We've got trends to the long side. Breaking above 58 puts us into that nice sort of trading window here. Even on the 4-hour, it gives us a window clearly up to that sort of $60 level. That's plenty of distance there for some decent trading opportunities. Now, from a currency perspective, we're looking at sort of fairly mixed picture on the US dollar at the moment, and the market did have some big moves on Friday. So trying to avoid the US dollar just at the moment, one of the markets here that we like is euro against the Aussie. So if we have a look at this on the weekly chart, we can see that the market is right back down into a sort of key level here, around this sort of 160 sort of 70 area, nicely back into the moving averages, back into this sort of price point. But from looking at this, our sort of perspective is that we'll be looking for shorts here. We're looking at this market rolling over, and if the market can sort of continue to break through this level here on the weekly chart, then we're looking for sort of continued opportunities, short and trading windows underneath price. If we come down to the lower time frames, you'll see the reason sort of why we're looking at the bias towards the short side. On the daily time frame, the uptrend now has been broken, and the market's now sitting right in this sort of interesting area. It's had a continued sort of weakness here from the euro from last week, and from a sort of fundamental perspective, the euro is looking sort of fairly weak across the board. And if that dollar continues to strengthen, that's still going to put pressure on the euro, and that's certainly going to help euro weaken with across other markets here as well, and namely the Aussie as well. So this market here, on the daily time frame, again, we've got that technical level here on the daily. If the market can just get underneath this sort of area, which is around sort of 160, sort of 50, you can see I've got the level a bit more precise here on the daily time frame. If this can sort of move just below this, puts us into a decent sort of size trading window, possibly down to 159 to begin with, and then maybe even a bit beyond if that trend continues. Certainly at the moment, we've got convergence to the short side, so our preference is weaker opportunities on euro against the Aussie. Even when you come down to the mid time frames here, we can see the market sort of rolling over, and there is this sort of key support. This support is what we're expecting to get broken, and we're looking for opportunities underneath the support. So we wait for that level to get taken out before looking at positions. So there's a few opportunities that we're keeping a close eye on in the trading room in the first half of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.